Folks, I need to share my thesis for the housing market with somebody who probably looks at the housing market more than I do, certainly at a national basis. The one and only, the amazing Lance Lambert from Fortune. How you doing, sir?
Good. Housing. Always a lot going on.
Yeah, you know, I certainly know my market of Fresno, California better than you, but you know the country 100x better than I do. And I want to just share with you my country thesis for the housing market because I don't think it's being covered well or accurately by most people. You do an amazing job, but I think most people miss it. They treat the housing market as one market, and I believe that is a fatal flaw. You ready for it?
Hit me.
So again, I always tell people to look at their buy box or their market. So again, there is no national housing market, there is your local market. But what I really want people to understand is even in your market, and I'm going to pick on Fresno, California, because it's the only thing I can talk about with certainty. I want everybody today to do this right now. Write down the median home price for your MSA or your area. And for me, I'm going to call it 400 so we have easy math. Okay. I believe there are three markets. First, luxury. All right. What's luxury? I call luxury 2x the median. So in my market of Fresno, California, $800,000 is what I'm considering luxury. Lance, that market is dead. Listings are piling up. I'm seeing days on market of over 100. I'm seeing six-figure price drops. I'm seeing expireds, cancellations, withdrawals. That market is dead. And I believe that's probably countrywide. Market number two, I call this the move up market. It is the median, which is 400 to 800. That market, traditionally speaking, is the most important, the most transactions. It's where you're a seller of one and you're a buyer of the other. I believe that market is frozen because AKA the Fed broke housing. It allowed lots of people to have interest rates that are now assets, sub 3%. They are going to stay in their homes longer than average. So that market is growing with inventory, perhaps, but also demand is off. It's not functioning as normal. And then there's the hot, which I don't think people are talking about. It's the median and below. In my market, again, 400 grand and below. And if you're 75% of the median, that market is white hot today. And I think so many people are talking about housing and the six-figure price drops and this price drop, and they're not segregating the market. I think inventory is the tightest sub-median. And I'll give you one more example and I'll let you react. So I had an agent, a top 1% agent, do all of these queries in the MLS, right? Active pendings, to show you how hot below the median was in his market. They had 230 active listings. They had 400, almost 500 pendings. That 2-to-1 ratio is not what most people would expect. But again, luxury, there's like nothing pending, right? And days on market is crazy. So I think first-time home buyer homes are hot. I think that market is only going to get hotter as rates come down. I think inventory is non-existent because the move-up buyer is not selling first. So I don't know. When I look at housing, I want people to think those three segments. How does that feel to you? Am I off? Am I crazy?
I think it makes a lot of sense. Well, I would say the hot. I would say that maybe on a relative basis.
Sure. Yeah.
Just given how much mortgage rates have went up and how much it's slowed down things, and also just not a lot of inventory too. But it is competitive in a lot of markets still, especially as we move into the spring there. I think with luxury, obviously the stock market is a huge part of that. What's the S&P 500 down? Is it what, 30%?
28. Yeah, 28%. Yeah.
Yeah, and the fear of a recession where you could go down another 20%. I think that's at play there. And then obviously just how much the luxury had moved up, because there was this psychology during the pandemic, the first 2 years, where there was a great wealth effect, where it was everything. Your home was soaring, your stocks were soaring. If you're into it, maybe your crypto is soaring. That's not storing. Well, now it's snoring.
Yeah.
But so now all of the asset classes, except really real estate, have moved down quite significantly. So there's that wealth effect. Also, the rates there too matter.
Oh yeah.
And so there's that market. The move up, like you said, a lot of people have these fixed rates. It doesn't make a lot of sense in a market where you've gone to 7, but also I think what matters here too is volatility. If mortgage rates would just hit 5, 8 and stay there, I
Yeah.
think over time, the move up's like, okay, whatever, that's the new market.
Right.
I really want this home. But the volatility is a big factor as well. But yeah, move up, which also has an impact on inventory because, it's a move up buyer, but also move up seller.
Exactly.
The first time, we're hearing a lot of reports about the potential for rents to come down. Maybe that's in some indexes,
Maybe, yeah.
but actual rents going down, the people are paying, very unlikely. And actually, they've gone up so high that it's really it's hot coals under renters' feet, right? They want to get into the housing market,
Right.
and so there's still that push because rents have moved up so high in such a short period of time, where it is kind of hot coals for these first time buyers.
Yeah.
And yeah, I think there is an impact on the aggregate data. If you look at the impact, look at the indexes like Zillow, the Zillow Value Index, which is down nationally, but not as much as Schiller. Zillow just looks at the middle 50%. They cut off the top 25, they cut off the bottom 25. And so when I do my regional charts, I'm just using Zillow. And it shows a lot fewer, it shows really half a market still at their peak and half not. Schiller shows everybody down for the 20 that they measure.
Yeah, the 20.
So I think that's telling. Now, a market that it has down and not, it's still at its peak. Zillow still has it at its peak. Like, let's say New York, that it still has at its peak. Well, Schiller only has them down like 1.4. So it's not like a huge difference. But if you do just look at the middle, it's not as much. Although places like Austin are down 10, just in. So there, it has happened.
Yeah, I think again, I think a lot of the markets that are down, call it 7% plus, without even knowing the list, I would guess most of them were iBuyer concentrations. That is going to go down, historically speaking, as something that exaggerated the upside, then they will exaggerate the downside, and then the market will heal itself. Just that iBuyer program or business model, it's going to go down as a $1 billion loser. Just free money, just an interesting idea executed badly.
Yeah, it'll be interesting to see how that plays out. Although, if it rebounds, those who bite now, maybe they'll make some cash.
Maybe.
Open door $1.
Yeah. Crazy.
I do have a chart I would like to show you, and it's actually from Open Door. Now that I brought them up, let me see.
All right, I just gave you access.
So this chart shows pricing patterns over the past decade. I think you might have liked this tweet too. So let me share my screen.
Yeah, I watch your stuff. So yes, I probably did. Oh yes, I remember this one. Yeah.
Okay. Oh, this isn't the, let me see if I have another one. I think I have a better one. Okay, I'll just go back to that one. I have to remember what I put in the tweets, then I can search them and find them all. Okay, so here it is. So this chart shows month over month pricing for the past decade, or at least going back to 2014.
Okay.
And if you watch my cursor here, here's the trend. You come into the year, it's a little soft in February, and then here goes the spring season.
Yep.
March, April, May, and this really right here, and this run through June, July, that's really the year's appreciation. Usually happens. And so then you start to soften, and then this is zero right here. And so
Okay.
you see some years in September, you kind of dip under that, right?
Mhm.
And then you kind of make your way back by November, and then into January, you're a little up, and then you come over here and repeats the cycle. And
Yep.
every line pre-pandemic is right here. It does not deviate past this cursor. Look at that. Every single one of those years is right there.
Yep.
Like right there. Then you have the pandemic. And here's 2020. And boom, 2020 hits, and it drops very fast. And we actually had a little bit of a falling price for 1 month. Not in the Case-Shiller because it's an average of 3. And then it moves up, right? And here goes the pandemic housing boom. And right here, from this moment to today, we have been out of our normal pricing for home prices.
Interesting. So for 30 months, we've been out of, historical
up or
norms.
down. Yes. And my view is this mortgage rate shock and what the Fed's doing is going to shock us back into some type of normalcy. Is, kind of been where my mind has been. But so you watch it go up, and here we are. We're off to the races. And each month, this line is up 1%. So every month we're 1%. Home prices.
Yeah, look at that. That's crazy.
And a little bit of a seasonality there comes into the year. And let me make sure I'm on the right one. It's this one. There it goes. Historic spring market 2021.
Wow.
And it's just ripping. And right here, as it decelerates, a lot of the narrative was in housing. Oh, okay. We're past this. We're going to go back to normalcy, right? But inventory moved up a little bit through here, and then it started going back down really fast.
It did.
And then we got this late fall boost, which never really happens.
No, I remember agents talking about it. They didn't know what was happening. Yeah. I remember that
And
time.
so we're off of it. And then we come into this year, and that 2022 right here, when we came into that year, 2022, mortgage rates still at 3%. The Fed effed up because
the Fed broke housing. Yeah.
They were too far behind, and mortgage rates were too low after such a run up, and inflation was ripping, and they got behind. And there are some theories that it was political because Jay Powell, that spring he was up for his 5 year.
He's up for re-election. Yeah.
Yeah. And so maybe that was a part of it, but it's ripping, and it actually goes to its all-time high right there in the spring. Wow. And right there is where that mortgage rate shock hits, and we just watch it fall down, and then it looks like, okay, maybe it's the pattern, and then we actually
just runs through it. Yeah.
And this is why we got these negative Case-Shillers, which we haven't gotten over month Case-Shillers in 10 years, because right there, and from July, August, September, October, we saw prices falling. That last one, we actually saw a little bit of a deceleration in the price drop. So it'll be interesting to see what these next two from the Case-Shiller look like. I got a report from Goldman Sachs that believes that November and December will be lower than the October one was. And what they're saying is because it's a 3-month average, is that actually last year when mortgage rates, remember they went up to 6 in like June, July, and then they fell down to like 4.9 in August. They're saying that cooled the cuts in prices. And so that,
as you would expect,
for October, because lag, and then we'll see what November, December looks like. But the guess is, even if prices were to keep falling, this line, this natural pattern in housing as the spring market comes, it's going to pull this, right? So even if we're still below zero, it's going to get pulled.
Agreed.
And that's just how it works in housing. And so I don't know what this line is going to look like next year, but it's going to follow some type of pattern to this. And let's just see
Yeah.
what it looks like. It'll be interesting to see what it looks like. If prices are falling in March, then we probably are
And
going to
that's a problem. Yeah.
peak to trough. If we get appreciation in March and it actually pulls up over zero, then it's like, well, hold your horses. Let's
Yeah.
let's kind of see what this looks like. But I really like this chart, and I wanted to show it to
Yeah, we
your
appreciate
audience,
it.
because I think it shows what actually happens in housing
Yeah.
throughout the year. And you
As
can
we,
see we're about to enter the months where appreciation comes.
yeah, I agree. Again, the March, I call it the spring selling season. I think most people do. I just artificially picked March 15th. Here, maybe it looks like it's actually February when it kind of starts. But again, it's coming. Kind of rounding this conversation out, Lance, do you know of any data that segregates housing data? Maybe it's luxury and non-luxury, or luxury move up.
I'd had to look at Zillow, but Zillow does a good job. They would have some good data. Schiller is existing single family homes, but I believe it's all of them. Yeah, I'd have to take a look at it, but I'm sure there's some good resources. It's
Yeah.
just not how I've been following.
It would, if you want to send them my way or whatever, I think that'd be great, because I do think, again, as a real estate channel, a real estate investing channel, most of my audience is median and below.
Yeah.
Right? They're not paying in luxury. They're not doing move up, at least most of them. And I think the markets are very different, right? You go from ice cold to, at least comparatively speaking, I'm calling it hot, hot. And also, one has growing inventory, one has potentially flat or shrinking, one FHA focus, first time buyer. There's a lot of stuff going on in that part of the market that I don't think is being reported on. And I'm just trying to highlight it for folks.
Yeah, and that brings up another point, which is a lot of the audience who follows housing to see if prices could crash. They're probably not buying in the top half either. Now if you're somebody out there who wanted to buy a second home, yeah, that actually does make a lot of sense.
Yeah.
Yeah, I think that's a good point, which is that the bottom half of homes are going to see something very different from the top half.
I think that warrants a discussion. Yeah.
I think there's one exception there.
Okay.
I think shit homes are in trouble and have been in trouble for now. They actually had a good run during the pandemic housing boom because just everything was selling.
Yeah.
So
I call them but homes. That's what I call them. It's
homes. They are reverting back to some normal,
as they should. As they should. Well, Lance, I appreciate everything you do. Obviously, I follow you on Twitter. I read your Fortune articles when I get sent them or I find them. You do an amazing job. All things housing. Thank you for all you do. Where can people follow you or reach out to you?
Yeah, they can find me on Twitter at News Lambert or Google Lance Lambert Fortune, and they'll find my author page.
Yeah,
Google.
folks, you got to read his stuff. It's All Things Housing. He does an amazing job of taking all of this data together. I think just last 2 weeks ago, we did a summary of 24 predictions or 26 or something. So he just blankets the country. Lance, thank you so much.
Awesome.